What's up, everyone? This is the AMZ Answers podcast, your week daily 10-minute blast of Amazon knowledge. This is episode number 14, business finances, how you can get the most out of those really, really large Amazon purchases that you're going to make. What's up, everybody? Welcome to the Jungle Loft. I am here with my brother Noah. I am Adam.
Welcome to Canopy.
This is episode number 14, Business Finances / Accounting. We are on Business Formation Week, episode number 4.
We're following this up with taxes, so people are just going to literally sleep through these 2 episodes.
Oh my god.
We should have hit them like...
They are so boring, but they're so important.
They suck ass.
And they just suck. Everyone will tell you it's one of the worst parts of owning a business is the legal and the taxes.
But the thing is that it's the worst part, and so people don't do it, and then their business goes to shambles. If you're not doing accounting, then you're losing money.
This is why corporations have whole legal and tax accountant departments.
We don't even want to talk about it. We're delaying. We're delaying because we're just talking about taxes. Okay.
What's a gripe you have?
A gripe I have? Tax websites.
Why is that?
That I have to submit my sales tax because it looks like Web 1.0. I don't know what's happening. They always break, and I have to restart. And these shitty government sites that I have to use all the time and submit sales tax. Especially California site, my God. Wait till you get to the Board of Equalization in California site. Wait till you have to do that. Write us about it. Because you'll be upset. Adam, what's your gripe?
One of my gripes. My gripe is that you have my Yosemite mug. That's a gripe I have.
Yeah.
It's a great mug.
I've stolen Adam's Yosemite mug. I'm actually going to take a sip out of it.
While we're on pod. Wait, where's mine? Do I have coffee in here? Oh, it's over there.
That is good coffee.
Damn, that's good coffee.
Black coffee.
Damn good coffee.
All right, and we are delaying talking about accounting.
All right, here we go. Business finances.
Okay.
How do you do business finances?
Okay, so we've already Adam, don't fall asleep. We've already talked about Fetcher.com, right? That's a great site to see what's coming in, or not what's coming in and what's coming out, but the profit that you're making and all of your expenses. I have another sheet which is called the cash flow, my cash flow sheet, where I pretty much add up everything that's coming in and everything that's going out monthly. Why don't we go over the
difference between cash flow and margin?
Okay, so margin is like I am selling a condom on Amazon for... Why'd you say a condom?
Condominium.
Yeah, a condominium. I'm selling a condom on Amazon for $15, okay? Amazon's taking $5. The shipping an item cost is $5, and I'm making a $5 profit on that item.
Yeah.
Okay? It is not necessarily what's coming in and out that month, right? Because I might buy the item in January, and it might sell on Amazon in April.
Yeah.
So you have to take into consideration some items that are really expensive. It could cost $15,000 before you get that item into Amazon and even be able to sell it.
You might run out of finances.
So when I first started, I got really close to running out of money. Not in like a bad way, like I'm not making money, but in like I have no more cash way, because it all went into inventory. I had to borrow money from my girlfriend. She charged me a humongous interest rate, and now I'm paying her back.
Bless her heart.
Bless her sweetheart, my lovely girlfriend, who I love. She's listening to this.
What's up?
Hi, man. What's up, girl?
All right. And we're talking about cash flow.
Look, we got distracted again.
Oh, no, you're good. Okay, cash flow is the amount of money that's coming in and out per month. It's not necessarily your profit, right?
No.
It's basically how much run do you have.
It is just as important as looking at your profit, because if you're not careful, you're going to run out, and then you're going to run out, and then you won't be able to move forward to sell those items. So why don't we just go over the metrics that I look at, or the metrics we look at, right? What is your monthly margin, or what's the margin on each item? How much are you making?
Yeah.
Okay. Your cash flow, what goes in and out, and then I do forecasting.
Okay, yeah.
Right? So, and by that I mean, which items am I going to need to re-up next month? Okay, and so what my cash flow is going to look for next month, and how much money do I have to do item development?
Wait, let's talk about all the things that we do during the month. So one we have Fetcher that automatically tracks sales and the profits you're making on each sale.
Yep.
Another, we have Excel spreadsheets that help us with forecasting.
Yep. So we have Excel spreadsheets that help with forecasting and cash flow. And then we have another Excel spreadsheet that we use for each item. And that kind of helps us figure out exactly what that item is costing. Because then you put that number into Fetcher.
Right.
And Fetcher pretty much takes Amazon, the information coming from Amazon, and makes it very readable. if you're trying to do your expenses without Fetcher and you're just like looking at Amazon reports, you're gonna kill yourself.
Please don't do that.
Please don't do that.
Please don't do that. The amount that Fetcher costs per month makes up for itself.
We gotta get paid. We
I know. Anyway,
we gotta
it's
get
terrible.
paid for them.
Wait, and then at the end of each month, you do an expense report.
Yeah, so at the end of each month, I tally everything up, right? And I see exactly how I did that month, how much money I made per day, what my total cash in was, and then I kind of write like a paragraph to myself of what went well, what didn't go well. Also, I add up all my items, just like physically, like I sold, 2,000 items this month. I sold 2,500 this month. This items this next month. I look at revenue.
Yeah.
So revenue. Sorry, I look at the total sales, which is obviously just the total amount of sales. Then I look, of course, at the margin. And sometimes it's different. Like sometimes I'll have a better margin, but less total sales. Sometimes I'll have more. And it's telling you different things.
Yeah. Yeah, I think that it's important to not just read what you have every month, but the actual act of writing your expense reports, it gets you in the mud with your finances unless you see what's going on.
Yeah. So, and that's why every month I write a paragraph to myself about what happened that month, what are some problems, what are some good things, and what action items I need to take going forward. Because it makes you look at the data. It makes you kind of figure out, okay, I see this data here, but what's actually going on?
The reason to do and be so intense on the accounting is to know what is going on with your business. And you can make decisions based on the accounting. You should make decisions based on the accounting. Not emotionally like, I want to sell these workout clothes because they look cool.
Because I like working out, and so I'm going to sell something.
And so everybody else likes working out. And
I'm going to sell a dildo.
Yeah, exactly. You and everyone else.
Yeah, I know. There's a lot of them out there.
Make decisions based on your accounting numbers.
Is there anything else we want to go over
with business finances?
With accounting and business finances, like what we
go with business loans. How did you take out a business loan?
Oh my God, I'm so glad you asked me that.
Mm-hmm.
So, my friend taught me this. I got so low on cash that I was like, I need a business loan because I knew my business was going to do well. But I just had so much inventory and so little cash that I needed to get more cash, essentially. Instead of taking out a business loan, just do this. Open up a credit card that has 0% APR, okay? And then, so let's say I had Chase, and I have like 2 credit cards with them already. And both those credit cards had like a $12,000 limit. What you can do is open up a credit card with a 0% APR for the first like 15 months. But that means that you just have to pay back the minimums on it for the first 15 months and they won't charge you interest. And then you call Chase and you ask them to transfer your credit line over to that credit card. So now you have like a $25,000 credit limit on a 0% APR card, which means that you basically have a business loan for 18 months.
It's so genius.
It's so awesome. My friend, I'm going to give him a shout. My friend Rod Brottergam taught me that one, and that
great
literally
one.
got me out of trouble. It was a great trick.
Interest-free loan.
Yeah, it was great. So I used it. It was great. I used it for like a couple months. Now I don't use the card anymore because I don't need it. But it was really awesome.
Only use it if you need it, obviously.
Obviously, only use it if you need it and if you know you're going to get the money back.
Yeah.
Okay. Well,
that's that. You guys can find us on the Facebook group at the AMZ Answers podcast Facebook group. Just the AMZ Answers.
Type in AMZ Answers. Type in
AMZ Answers. You'll find the group.
Type a bunch of AMZ Answers.
Ask us questions about
Facebook.
accounting, finances.
Ask us.
Sleeping.
Before you go to bed.
Going to bed.
Napping.
Napping.
Bye, guys.
Bye.